All right, so welcome to the deep dive, where today we're going to be looking at the market landscape and kind of see what's going on under the surface.
Yeah, fascinating.
And our trusty guide for this is going to be a December 2024 market update report that we got.
Oh, cool.
And yeah, let me tell you, it's got some interesting stuff in there.
Oh, really?
Yeah, there's some potential market dips coming up,
Ah,
but also some opportunities. So
interesting.
yeah, it's a pretty dynamic picture they paint.
Well, yeah, markets are rarely calm, are they?
That's true. That's true.
Always something going on.
Yeah. So one of the things that I saw right away that kind of stood out to me was the Federal Reserve's recent decision.
Okay, yeah.
They announced an interest rate cut, but it was smaller than I think a lot of people were expecting, only 25 basis points.
Yeah, I saw that.
And they also hinted that future cuts in 2025 might be fewer than we initially thought.
Right.
So what does that mean for the average listener out there?
Well, I mean, the Fed's actions always kind of, send ripples through the market.
Hmm.
And this cautious approach, I think it's making investors just kind of pause and reassess. You know,
Yeah.
it seems like they're a little bit concerned about inflation still, and then also the economy is surprisingly resilient.
Right. So instead of like hitting the gas, they're kind of like tapping on the brakes a little bit.
Yeah, exactly.
And I think that's making people, rethink their game plan.
Yeah, for sure. And that's where I think understanding market cycles become super valuable.
Hmm.
It's like having a compass when you're navigating, kind of rough waters.
Right.
And this report dives into those cycles, specifically like, affecting the S&P 500, Bitcoin, gold, all that stuff.
Okay, so let's talk cycles then.
Yeah.
The report says that the S&P 500, Bitcoin, and gold are all in a cyclical decline right now.
Yeah.
Does that mean we should panic?
Oh, no, not necessarily. I don't think so. I think they're emphasizing that this is more of a natural correction than the beginning of like a bear market.
Okay, and can you explain what a bear market is for someone who might not know?
Yeah. So a bear market is basically a prolonged period where prices fall significantly, usually like 20% or more from their peak.
Okay, so we're not talking about like a full-blown crash, just like a dip.
Yeah, a dip. Yeah, a correction, exactly.
Okay, good clarification.
And they're suggesting that this downward trend is probably going to last about 6 weeks and kind of bottom out around mid-January 2025.
Mid-January. All right, so mark your calendars, everybody. Mid-January.
Write that down.
Something's happening. Is there something special about that time or?
Well, this is where it gets really interesting. Okay, so
Okay.
their analysis suggests that mid-January dip could be like a buying opportunity,
Oh.
where you can get assets at a discount potentially before they rebound.
So instead of panicking, we should be like rubbing our hands together, like, yes.
Exactly like a market sale, you know,
Yeah.
time to
Mm.
stock up.
Okay.
And they even go as far as to suggest maybe a short selling opportunity for the S&P 500 around the 6,000 point mark.
Okay, so we're going to have to unpack short selling a little bit later for people who don't know what that is.
Yeah, we'll definitely do that.
But let's talk about Bitcoin for a sec,
Okay.
because that's been making a lot of headlines.
For sure.
Bitcoin saw this incredible surge of 107%
Yeah, it was crazy.
before it entered its current correction phase.
Mhm.
So what does the report say about that?
Well, they say this dip actually aligns with Bitcoin's typical 60-day cycle.
Okay.
So it's probably just a healthy correction. Don't panic.
So it's like Bitcoin taking a breather before it makes its next move.
Yeah, exactly.
All right. And what is that next move?
Well, they're anticipating like a temporary bounce back,
Okay.
maybe testing the 10-day moving average.
Okay. And for people who don't know what a 10-day moving average is.
Yeah, so basically it's just the average price of an asset over the past 10 days.
Okay.
Traders use it to kind of gauge, short-term price trends.
So like Bitcoin's going to hop up and then maybe continue going down towards that mid-January bottom.
Potentially, yeah.
Okay. So I guess the question is, if all these assets are going down, why is mid-January so important?
That's a great question, and I think that's something we should definitely explore further.
All right. So let's do that.
Okay.
But before we do, I want to touch on something you mentioned earlier about short selling.
Right.
It sounds kind of interesting, but can you break it down for people who maybe aren't familiar with it?
Yeah, absolutely. So imagine you believe the price of something like, let's say the S&P 500 is going to go down.
Okay.
Short selling basically allows you to potentially benefit from that decline.
Interesting.
It's kind of like the opposite of buy low, sell high.
Oh, so instead of buying and hoping it goes up, you're like, you want it to go down.
Yeah, basically you're borrowing shares of the asset from someone else
Okay.
and then selling them at the current price,
Okay.
hoping that the price will drop, and then you can buy them back at a lower price and give those shares back to whoever you borrowed them from.
Okay, so you make money on the difference.
Exactly.
But what happens if it goes up instead of down?
Well, that's the risk with short selling, right?
Yeah.
If the price goes up, then you got to buy those shares back at a higher price.
Yeah.
And you could actually lose more than you put in.
Yeah, that makes sense.
So it's definitely a strategy that you need to know what you're doing.
Not for the faint of heart.
Exactly.
Yeah.
Do your research, have a plan.
Definitely good advice.
Potentially talk to a financial advisor
Right.
before you do anything crazy.
Always good advice. We always encourage our listeners to do their research,
For sure.
make sure you know what you're getting into.
Definitely.
But okay, so let's shift gears back to like the big picture.
Yeah.
We've been talking about dips and opportunities, and this mid-January date is really looming large.
Yeah, it's coming up.
What should our listeners be looking out for as we get closer to mid-January?
So assuming this report is correct and the cycles play out, like they're saying we could see those assets, S&P, Bitcoin, gold bottom out around mid-January
Okay.
and then potentially start climbing again. And so for investors who are thinking long-term, this might be a good time to start, maybe adding to their portfolio.
So like if you believe in the long-term potential of, let's say, Bitcoin or the S&P,
Right.
this is a good time to buy in at a better price.
Yeah, potentially.
Yeah.
I mean, obviously nobody has a crystal ball,
Right.
but, you got to remember that market movements are affected by lots of things.
Yeah, it's not as simple as, just a calendar date.
No, of course not.
Okay, so the report focuses on the S&P 500, Bitcoin, and gold.
Right.
What about other assets?
That's a really good question.
Like, are there other opportunities out there that we should be thinking about?
Yeah, I mean, it got me thinking because, if there is a correction, it usually affects lots of different asset classes, not just stocks.
Right, we've got real estate bonds,
Commodities.
commodities.
Even
yeah.
like alternative stuff like art and collectibles and things like that.
Right.
So it's always good to diversify.
Don't put all your eggs in one basket.
Exactly.
Spread it around.
Yeah, find something that aligns with your, goals and your risk tolerance and all that stuff.
Absolutely.
That's the key.
Okay, so this report gives us some things to think about,
For sure.
but it's really important for everybody listening to think broadly and look at everything.
Yeah, absolutely.
Do your research.
Do your research. Yeah.
Okay, so let's circle back for a second to the Fed's interest rate cut.
Okay.
This was a big part of the report's analysis.
For sure. A major factor.
So can you talk a little bit more about like what it means that they raised rates by less than expected,
Right.
and then they said there might be fewer cuts next year?
Yeah. So the Fed's moves are always really important because they affect borrowing costs, they affect inflation, economic growth, the whole thing.
Yeah. So how does that affect the market cycles we've been talking about?
Well, that's a good question.
I mean, they seem to be like taking a really cautious approach.
They are. Yeah. And it seems like they're trying to balance controlling inflation,
Yeah.
but also, keeping the economy going.
Right. So it's like a tightrope walk
Exactly.
between those two things.
And that makes things a little bit tricky,
Yeah. So investors need to be ready for anything.
Yeah, I think so. Because on one hand, higher interest rates can cool down inflation, but it can also, put pressure on asset prices like stocks could go down.
Right.
But on the other hand, if the economy is doing well, then, companies make more money.
Yes.
And that could push asset prices higher, but then inflation could go up.
Right. So it's like a this and that.
It's a whole web. Yeah.
Yeah.
It's all connected.
It's complicated.
It is, but, understanding these things and understanding that cycles are a thing, that can really help you make good decisions.
That's true. Knowledge is power.
Definitely.
But I think it's important to remind everyone that we're talking about predictions here.
Okay.
And the market can do whatever it wants.
Yeah, nobody knows for sure.
So do your own research. Think about your risk tolerance.
Talk to a financial advisor
Yeah, get some advice
if you need to.
before you jump in.
Exactly.
Okay, so let's shift gears one more time and talk about the long-term outlook.
Right.
So despite all this volatility and the dips and everything, the report is actually pretty optimistic.
Yeah, long term.
Yeah, about the S&P 500, Bitcoin, and gold.
Yeah, they seem to think it's all going to be okay.
So why is that?
That is a great question, and I think that's worth exploring in a little more detail.
Okay, so let's do that.
Right.
Let's take a closer look in part 3. Okay, so we're back, and we've talked about all this volatility and potential dips and even short selling.
Yeah, it's been a wild ride.
It has, but now I want to kind of zoom out and look at the long term.
The big picture.
Yeah,
Yeah.
because this report, despite all that stuff, is pretty optimistic about the future.
Yeah, long term, it's looking good.
Yeah. especially for assets like the S&P 500, Bitcoin, and gold.
Right.
So why are they so bullish?
Well, if you take the S&P 500, for example, they're saying a big factor is that corporate earnings are still growing.
Oh, okay.
So even though there's some, economic uncertainty out there, a lot of companies are still doing well.
So they're adapting.
Exactly. They're figuring it out, and that's a good sign for the future.
So it's not just about, riding the market cycle. It's about the actual companies themselves.
Yeah. You got to look under the hood,
Yeah.
make sure the engine is running.
Right, exactly. And they're basically saying that, those strong earnings can kind of outweigh the short-term ups and downs.
Yeah, they can provide a solid base for long-term growth.
Like a good foundation.
Exactly.
Okay, so what about Bitcoin?
So Bitcoin, obviously, it's volatile. We all know that.
Yeah.
But the report's pointing to the fact that it's becoming more and more accepted.
Oh, okay.
Like a real asset class.
Mhm.
More institutional investors are getting involved.
So it's not just like, people in their basements anymore.
Right, exactly. It's becoming more mainstream, and that legitimacy can really drive demand over time.
Interesting. So it's like Bitcoin's all grown up now.
It's maturing.
Yeah.
Yeah.
Okay, so then we have gold, which is like the OG safe haven asset.
Yeah, the classics.
Yeah, and they're saying that its role could become even more important.
Especially if inflation sticks around.
Or if, like, crazy stuff happens in the world.
Geopolitical risks, exactly.
So it's like when things get scary, people run to gold.
It's a classic move, yeah.
And I guess Bitcoin is kind of like the new gold for some people.
Yeah, some people see it that way.
But it sounds like, the old school gold still has a place.
Oh, definitely, especially if you're worried about, the economy or the world in general.
So basically they're saying if you have a mix of all these things, stocks, Bitcoin, gold, you're probably in a pretty good spot.
Long term, yeah, diversification is key.
Don't put all your eggs in one basket.
Exactly. Spread the love.
All right, so I want to circle back to something we talked about earlier.
Okay.
Which is this idea that, this correction could create opportunities beyond just the S&P 500 and Bitcoin and gold.
Right, like what else is out there?
Yeah, what else should we be looking at?
Good question. And I think it's important to remember that, each asset class has its own personality, its own quirks.
Right, like real estate's going to act differently than Bitcoin.
Exactly.
Yeah.
And they're all going to respond differently to what's happening in the market.
So it's really about doing your research and understanding all those different dynamics.
Yeah, and figuring out what makes sense for you.
What aligns with your goals.
Exactly.
Okay, well, I gotta say, this deep dive has been really enlightening.
Yeah, it's given us a lot to think about.
It has. I'm feeling inspired to go do some more research now.
Me too. Always good to keep learning.
Always. And listeners, we want to hear from you.
Yeah. What are you watching?
Head over to our social media and let us know.
Join the conversation.
Share your thoughts, your questions.
Let's keep the deep dive going.
All right, until next time, happy investing, everybody.
And keep diving deep.